All right, Alex, let's start by introducing our audience to yourself as well as Nectarine Credit.
Yeah, thanks. Thanks for having me. My name is Alex Armitage, and I'm the CEO and founder of a FinTech startup called Nectarine Credit. And Nectarine Credit is the short description is we're a credit application management software system. And what that means is that in the not too recent past, most manufacturers and distributors were emailing and faxing and sending PDFs back and forth for business credit applications that basically complete a very simple task of approving or denying commercial credit terms. And because this system had been done for decades originally through snail mail, physical mail, and fax, people, and more recently over email, people have just been used to doing it in this sort of archaic way. And we've created a digital solution to basically like expediting this whole process. And so the credit decisioning process begins with a credit application. When a buyer of goods goes to a seller and says, I want to buy 10,000 widgets, the first question is, they say, great, thank you. The first question is, can you fill out a credit application? And so we have started with a SaaS platform, that basically digitizes that entire process, and we're getting lots of traction. We're moving and expanding from there and adding lots of third-party data and validation. We're connected to more than 10,000 banks for bank account verification and bank account bank balance checks and cash flow reports, and basically doing a deep dive into the credit check and the credit analysis and decisioning.
I see. So let me understand the segmentation of where you are positioning your product. Is it in the manufacturing sector mainly?
It's not just manufacturing, but manufacturing is a key key area we're focusing on. It's mostly physical products. There's distributors, manufacturers, contract manufacturers.
Yeah. Anybody who takes orders for physical products from other businesses and need to validate credit of the orderer. Correct. Of the customer, that's where you're positioning yourself.
Correct.
Interesting. And how long have you been doing this?
About a year now.
About a year.
We had some beta customers. We had some beta customers that helped us launch basically, and then we launched publicly about a year ago.
But you already have over $5 million in revenue.
Correct.
So
we had
clearly
contract.
You found sorry?
Well, I was just going to say we had beta customers. We had a lot of beta customers from other industries that we were in previous startups. We recognized this problem, and they signed up. We built a platform for a couple dozen customers who already needed this system in place, who needed the system, and they signed up in advance. We built it for them, and the beautiful element to our business is there's an amazing network effect. And how that works is we've got one credit provider that is a seller of goods asks each individual credit seeker that is a buyer of goods for many different references. So those references, typically it's 4, sometimes it's 6 references, and those vendor references are prospects of ours. So the prospecting for our new clients, people are coming on board our platform because they're being asked by their customers to come on. So there's a network effect where each credit provider we have will have 4 or 6 new vendors under each credit seeker. So, for example, just so you understand the exponential growth of the platform, just so you understand the exponential growth of the platform, what that means is one credit provider might bring on 100 customers a month, for example, and then each of those customers will have 4 to 6 references under him or her, right? So that means you've got 400 to 600 prospects, and that's just one original first generation user of our product. So as we add more, there's an exponential growth.
So you started with a dozen beta customers who actually ordered the product in advance. You built the product, they came on board as paying customers, and they brought on each of them 400 to 600 other prospects that you have started to convert into business as well.
Yeah. I mean, that's like a simplification of it, but that's essentially how we're moving forward. Yeah, and it's a huge problem, right? I mean, if you think about it,
absolutely,
thousands of companies every day, tens of thousands are sending out physical, paper, or PDF applications, and are asking for credit verification over email, back and forth, and sometimes the emails take there are dozens of emails sent, and sometimes that process takes literally months, and our system takes a matter of, in some cases it takes minutes.
So help me understand a little bit of how you built this product. You started off by saying you have 10,000 banks. Now, how do you select which banks to bring on? Is it through that customer base and the banks that they work with?
Yeah, I mean, you're asking. I think what you're asking is how do we select those banks, and where do those banks come from, and how do we partner with them? Right. Yeah, so good question. So, I mean, there's only a finite number of banks, and you've got your usual suspects in, the United States or let's call it North America. And if you target, let's say you target 50 banks, there's a pretty good chance that if you can get a majority of those banks, you'll have a majority of the business out there. So it's a little bit of the 80-20 rule. And, we targeted a lot of these banks, and we have integration partners that we work with. We have a lot of third-party data companies that we're working with. The credit decisioning, what's interesting about the whole process is the credit decisioning process is very fragmented and disjointed. But at the same time, there's just really a couple very big players at the top that have really, had the market to themselves for a long time. And we partner with a lot of these companies. For example, like you're familiar with Equifax and Experian and Dun & Bradstreet. And those companies are, big behemoths and really the sort of gold standard in the credit decisioning, credit reports, credit scoring process. And partnering with them is also key to sort of building out our network.
Yeah, so I'm actually that's exactly what I was thinking, is that we've seen a bunch of companies and businesses, FinTech businesses that have been predicated on this premise that you're working with, is just speeding up the credit approval process, right? We've seen this whole category like On Deck Capital and Cabbage, who do consumer credit, or small business credit, actually, not consumer credit, small business credit, and they use as their input signals like eBay transactions or Amazon transactions and so on. Intuit is doing a QuickBooks financing product that uses QuickBooks data, proprietary QuickBooks data, to determine transactions and solvency and so forth, creditworthiness. American Express has a similar, product. So if you said to me that Equifax and comparable behemoths are your primary source of validation, that would say one thing to me. But I think why I probed your 10,000 bank question is that it takes time from a product building point of view. It takes time to integrate all these banks, isn't it?
Yeah, sure. I mean, it takes a lot of time, but there are, I think what's important to understand about the credit decisioning process, if you're a credit analyst, there's not a one right answer when you're giving a company or a consumer credit. Everyone's going to have a different answer. So in other words, different credit analysts will have different answers, but also you're dealing with imprecise, or maybe not imprecise, but also missing data. It's a bit like putting a puzzle together in the dark, or partly in the dark. So what we're doing is we're providing a platform with tools and data and analytics, and the credit analysts who use our platform can then take those data points and use them to their, to fit their own algorithms and their own credit decisioning models. So, what that really looks like is that everybody has a different answer when it comes to credit decisioning, because everybody values data points differently, and there's no right answer. But our job is to basically provide as much data and as many options, good options that people can use. So to go back to your comment on the 10,000 banks, just having bank account verification and just getting data on getting cash flow data, or say like the maturity expiration dates of a credit line, like that may not be. In fact, I'm certain it's not enough information to, for a credit analyst to decide on credit. So they take a lot of things into consideration. So our job is to offer a lot of data and a lot of analytics, and part of that includes partnering with people. So you can't do it alone, right? And even the behemoths, D&B, and I don't mean that derogatory at all, like the big companies, Experian and D&B, they are not primary sources for their data. They collect their data from their partners as well, and so it's a collection game in that sense.
Yes, well, I guess the trend that I've seen in this market is that people kind of zero in on one set of data and develop a set of heuristics based on which they are making these decisions, right? If you look at Cabbage, for instance, they weigh very heavily online transactions, and they kind of look at the transaction volume, and they are willing to lend against that transaction volume, and that's their primary heuristic. In the case of Intuit, they're basically using QuickBooks data, and they've developed heuristics on top of that data. So yours is, you're not a proprietary data provider, or you're basically bringing on a lot of data signals, and then you're offering heuristics on those different data signals. So I'm curious on how did you get the company going? What was like a minimal viable product for a company like what you're talking about?
Yeah, that's the $1 million question. The MVP debate is discussed and passionately debated on every startup blog and podcast, from Silicon Valley to the other side of the world. There's the expression sorry, let me see if I can get this right. If you launch your product and you're not embarrassed of it, then you waited too long, right? This is a common oft spoken about quotation. And while there is truth to that, we knew, we do have some competition, but our competition is also quite fragmented. And but some of our competition is basically this old rudimentary system of going back and forth over email and fax. And the bank account verification, which is a key element of our platform, we knew we had to have, because the current system for bank account verification is 100% broken. It's manual. It takes time. It takes 24 hours to 24 days, sometimes longer. And it doesn't take a Harvard grad to realize that there's a better system than calling calling a banker at Citi, small business banker at Citi or Bank of America, and saying, I need to confirm the following bank account, and setting up a relationship with that person and going back and forth and saying, yeah, I'll get that to you, Alex. We hope to get it to you by the end of business tomorrow, and then it doesn't come. And then they say, look for a confirmation email, and then it goes back and forth a few times. And we just knew that system was broken. And so we knew that if we could come to market with something that was not just a little better, not just a lot better, but orders of magnitude better, we could get some market share. And so your question about building the platform, this was what kept our team up at night, because what do you launch when your competition is a manual system? You don't want to come out with something that's so what's the word? So futuristic that it turns people off, but you want to come up with something that is futuristic, that they realize it's worth the time and effort and money to invest in this, because it'll quickly start saving them some time. So
in your case, the bank account verification was almost like table stakes. It's a low-hanging fruit. It has to be done. That's where you started. Was there anything else that fell in that category that absolutely needed to be in the minimum viable product in your 12 beta customers?
Yeah, so that's a good question. There were a lot of things. It's interesting when you talk to a customer or a prospect, or even an investor in your company. Everybody has a different opinion on what is the MVP and what they have to have, and full disclosure, it's a struggle, because everybody says they want something, and then when you actually look at the data, sometimes they're not using what they said they had to have.
Sure.
So that's a real challenge, not just for us, but other. We're a startup. To some extent, we're a startup. We have nice traction, but I've spoken with companies who are doing, orders of magnitude of revenue over where we're at, and they have the exact same problem, that customers say they have to have something, and we need
they don't use it.
And then they use it, or to very little extent.
But if now that you have some data and you have quite a few customers, what are some of the more actively used features that you put in early on that are part of the success factor of your product?
So, the bank account verification is a key component. And like you said, it was low-hanging fruit in terms of we knew that was a product feature.
Requirement, sure.
Requirement that we had to have. But really the whole process of that, I think it's important to note that the credit application process for small businesses was broken. It really was broken to the extent that companies don't get credit, not because they have bad credit, but because the system is broken. People don't get faxes. Bank accounts banks don't verify bank accounts because they didn't get the fax, or they didn't get the email, or it just went into an info at Bank of America, or info at Wells Fargo. And
so you're saying just digitizing the process and the workflow was part of the minimum viable product.
Yeah, and so exactly for us, that's exactly right. You hit the nail on the head. For us, it's not like this bell and whistle and this feature and that feature. For us, it was like, how do we make the process that flow? And for the credit provider, that flow is like a 3-step process, and it takes less than 5 minutes. To basically build a credit application and then send it out to your customers takes seconds. Whereas before, it didn't take seconds. It took much longer, minutes or 20 minutes. And for the credit seeker, that flow is a six or seven step process to basically just go through and answer questions on the fields, through the fields, answer those questions. And then, of course, we're at MVP 2.5 or something now, I don't know where we're at, but we're always adding little additions to increase that efficiency and decrease the friction. That's our main goal, because we want, it was a friction-full process before, and we're trying to make it frictionless. And so we're always trying to find ways to improve that. And so it's hard for me to talk about individual I can talk about features, but it's hard for me to really talk about it. It's not a very sexy business.
No, I'm not thinking about features. I'm thinking about what are the data signals and heuristics that are driving this decision that are being automated. That's what I was trying to gauge.
Yeah, fair question. So I can give you an anecdote. One of the things that we've discovered is that it's a credit seeker, a buyer of goods, is tired of filling out credit applications, dozens of times a month, or maybe in some cases dozens of times a week. And it's essentially all the same data, right? It's your name, it's your company name, it's ownership, who owns what, is it an LLC, is it a C Corp, is it a sole proprietor, where's the company based, the website, all this standard information. It's like everybody asks the same thing. 80 to 95% of the data is the same data on every single credit application. And so we solved that problem by allowing credit providers to, build their custom credit app. Everybody has 90% of the same information, and then there's custom fields that they can add. But what we haven't quite solved yet, but we hope to, is the other side of the equation, which is the poor credit seeker is filling out the same form again and again. And so we are collecting lots and lots of data, right? Every day when people sign up, credit seekers, credit providers, buyers and sellers, when they're signing up, we're collecting data. And so one of the things we've realized is that these and it's obvious, right, thinking about it from the sort of 30,000-foot view, is that the credit seekers are just sick and tired of filling out this information. So now we're creating an onboarding for them to basically never have to fill out a credit application again. They fill it out one time, and they build their profile. And then the only thing they have to do every time, and of course this is also a networking effect, right? And we'll talk about that in a minute. But what that is the credit seeker, the buyer who's constantly going out to distributors or manufacturers or whatever, and they're going out and filling out the same credit app. It's not really the same one, but it's the same data every time, again and again. And so what we're building is a way for them to build a profile one time and never then
auto-populate the form.
Sorry?
And then auto-populate the applications.
Exactly, yeah. And so then the only thing they do is when somebody says, please fill out my paper application, it's in the PDF and the fields are locked. I mean, you've probably had this in your life. The fields are locked, or you fill out a Word doc and it wraps around to the next page and knocks down the text. It's just a nightmare. And imagine doing that like a dozen times a month. You just have a full-time person to do this. And so, the obvious logical step was to feed both ends of this equation. And so that's, an example of a feature that wasn't in our minimum viable product, but, it's certainly like MVP 2 point, whatever we're at.
Right. So, Alex, how did you get your first customers? It's like a lot of the trick in all this is to get those first dozen beta customers. How did you get them?
So we have some other businesses that we've run in the past, and they're e-commerce. A couple of them are e-commerce companies, and those companies we had relationships with suppliers and distributors, and we knew that space quite well, and we knew that this was a problem. So we had it was more than a dozen, but we had we had hundreds of relationships with companies in various, all roughly in the same sector, but, let's call it packaging and plastics and contract manufacturing. And we had hundreds of contacts in that space, and we went to them and said, we've done business in the past. We know this is a problem. We filled out your credit application. How can we make this process, any easier for you? And, we surveyed them, and then we went back to all of them and said, here's some wireframes. Would you sign up at a discount, if you sign up today? And this is the approach we took, and we basically partnered with them. That's the way to do it, is to go, to go. We didn't build anything in a vacuum, but it feels like a vacuum because you've got your head down and you're developing and programming and digging deep. But we had partners to help us, customer partners.
Yeah, great. So you understood the problem from your prior business life, and you had contacts who had experienced that problem. So you just went back to them and said, okay, you have this problem. We know you have this problem. Here's how we propose to solve it for you. We have a trusted relationship. Let us solve that problem. And that's how you got your early customers. Yeah, great.
Correct. And it's also, I was just going to add to that, it's important to note that a lot of them didn't even see it as a problem, because it's like, it's a system that they've just had for 10 or 20 years, and they're
used to it. That's their way. That's the way they do business. They didn't even think that it can be done differently.
It's a little bit like, nobody 40 years ago said, like, I want to solve your telephone problem. I can make this better for you. People be like, well, I don't know. I answer the phone and it's fine. I said, oh, yeah, well, eventually it's going to be mobile and it's going to be a smartphone and all this. And people would have just looked at you like you were probably like crazy or from the Jetsons, just overly futuristic innovation for innovation's sake, right? But now, like, I don't know anyone who has a landline, and everybody I know has a smartphone, and everybody has a, et cetera, et cetera. It's just this waterfall of technology. And, but nobody saw it as a problem. And so we had to show them that what they were doing, of course you don't want to be patronizing, but you really need to show them just how efficient digitizing this rudimentary business process is.
We have, in the Thought Leaders in FinTech series, we have been looking at all kinds of different customer problems. And clearly in FinTech, solving various credit-related problems and speeding up the credit approval process has been a recurring theme in consumer credit and business credit and, mortgage financing, all kinds of areas. We've seen all kinds of different nuances, and you have presented a very interesting nuance in a very specific, very pointed, very sharply positioned problem domain where you have a simple solution. It's a complex solution from an implementation point of view, but at the end of the day, to describe the problem and describe the solution is not complicated. There's a lot of integration and a lot of, partnerships that you have to create to make this work at scale, but it is a simple problem that you have identified in a simple context.
That's absolutely right. And that goes back to what I was referring to, in that a lot of people, it's a simple problem, and it's almost so simple that people didn't see it as a problem, right? They were just like, this is what we do. We go into the office and we email people 5, 10, 15, 20 times to get this credit process. And, typically it's accounting clerks who are doing that back and forth. And so it's their job.
Right. Now, switching gears a little bit, I would like to ask you to take a 30,000-foot view of the space, of the business credit space. Are there other contexts or nuances that are on your radar where there are such problems that have not been solved, and people are still following archaic processes, and the credit process is still slow, and so on?
Oh, that's a great question. We're sort of, I mean, you've just potentially revealed a fault of ours, in that we're really focused on like the immediate, 3 to 6 months.
No, you should be focused on your domain. There's no question. I'm asking you this from the point of view of new entrepreneurs who are, we educate entrepreneurs, right? That's our job. Mm-hmm. So we always try to unearth from people who have interesting vantage points. We always try to extract pointers to problems that need to be solved, because there are a lot of people who are looking for problems to solve and start new companies.
Yeah, I mean, I guess what I meant by that is, we're just so focused on, what's in front of us, like 3 to 6 months or a year, because, we're young and nimble, and we're really just trying to, ride this wave. But it is important to look out, like, as you said, the 30,000-foot view or the 5-year view, and see where things are headed. And I don't have a great answer for you, and it's going to sound cliche, but there's a lot of validity to it. But I think the future of credit, of our company, and credit decisioning is going to be, some sort of AI decisioning process. And what that looks like, I don't quite know yet, but I can give you a flavor of what it may look like. And I believe that it'll be less manual work, which, of course, we're helping and reducing that. But the credit decisioning, where, and some of this is already done, right? The DNBs and Experian will spit out this company should get, the credit recommendation for company ABC is $50,000, right? And they've done that. But I think that's going to just get more and more powerful. And companies like us, smaller companies, and people in the FinTech space will really start to excel in that. But for us, it's a few years out. But you're seeing it. You mentioned earlier about Cabbage, and I think you mentioned
On Deck.
On Deck and Amazon, and this is like, it's interesting. Like, Amazon offers sellers on its platform financing. So from what I understand, they send these emails saying, you've been approved for $200,000 in financing at this rate, or you've been approved for $1 million in financing at this rate. Well, they're, Amazon, they're not dummies, and they've got some really smart people working there. But it still took them a long time to start introducing that financing. So sellers have been on their platform for a long time. I don't know what it's been, like 10 to 15 years. I'm talking about third-party sellers.
Yes.
And, they really just launched their Amazon financing. I'm not sure the term, so correct me if I'm wrong, but their sort of third-party Amazon financing really just in the past, like 5 or 6 years. But it was a no-brainer on some level, because they know the cash flow, they know the turnover of their products, they know the speed and velocity, and they know, they can take a pretty good guess at the margins, and they know that during the holidays, people bulk up their inventory and, whatever, October, November, December, and they know seasonal products in the summer. And so that is a credit decisioning, an amazing AI credit decisioning tool that we're going to see more of, not just by retailers, but anybody in the space, right? People who can see transactions and see data, and including ourselves. Like, we will get to the point where we will offer financing, because we will have data, and we will say, okay,
right,
this company, we are recommending this company gets $100,000 credit, and the credit provider will say, no, that's too rich for our blood. We don't want to offer them that. They have to pay cash up front, and then we can step in and say, we will offer you financing at X percent.
That's right.
Right? And that's
the whole game is data, right? Once you have data, you can play that data in many different angles. So yes, you are on a path to accumulating a particular niche proprietary data set against which you can introduce a full financing function. Yes, absolutely.
Yeah, correct. The data is so powerful, and that can't be that can't be overlooked, right? Like, just that comment.
And some of the players are in interesting strategic points, like Amazon, like Intuit, like American Express, like eBay. They have data, and they're lending against that data. And I think players like you, who are providing software in this space, are also going to, over time, accumulate interesting data against which there will be additional FinTech opportunities for actually introducing a financing function. Very interesting. Very interesting conversation. Alex, do you want to add anything, or have I mostly captured what you had to say?
No, I mean that's the gist of it. Happy to answer any other questions you have.
No, I think this is good. We'll be in touch if we need anything else. And thanks for sharing your story.
Okay. Yeah. Thanks so much. Appreciate your time.
Bye.
Okay. Bye.